Hi, we want to look at how professional traders use Fibonacci tools. I like Fibonacci retracement tools very much that I designed so many strategies around it. I use it creatively. If there's any tools I love in Forex trading, I love using moving average, I love using trend line and Fibonacci tools, Fibonacci retracement tools. Now let's go straight away. These are very good tools when we are looking at the trend and the trend is defined. From here now we can see that the trend is bullish, that's uptrend. What we do as a price action trader is to buy in an uptrend and sell in a downtrend. So in an uptrend we tend to try to buy low. So we'll come here, fix our Fibonacci from swing low to swing low. This is where the trend, this is the move that broke this resistance, so this is the beginning. So swing low to swing high. So that's how we draw Fibonacci retracement tools in an uptrend. We draw from swing low to swing high, and we will look for a perfect setup for this strategy. A perfect setup for this strategy requires that the trend should be retraced to at least 38.2% Fibo, or better still, it should retrace between 50 and 61.8% or below. So we are looking for a nice retracement that can get to at least 30.2%. If it does not get to this place, we don't consider it as a valid retracement for this particular setup. Now you can see that this is a good setup for the trade. So once this is been confirmed, then we'll remove the Fibo, and now this is, then we'll now focus on this retracement, which is down. This is a bearish retracement, so we'll come here again and draw retracement tools on this retracement, which will draw from swing high to swing low. You know, in a downtrend, you draw from swing high to swing low. Okay, so our goal is to use this retracement tools to enter the market at the right point. That's to buy at the right point and get good profit. So we are going to place our buy here, our sell here, our buy here, our stop loss here, and our take profit here. So put our take profit here, put our buy order here, and then our stop loss here, because we are in an uptrend. We don't trade the retracement, we trade continuation of the trend as price action traders. Now if we have gotten this, the next thing we're going to look out for is if you are an aggressive trader, you just place your buy stop here, stop loss here, and take profit here. But a conservative trader will wait for price to close above this level, which has already happened here. You can see that price has closed above the level. Then place your buy limit at the 61.8%. Buy limit, stop loss here, and take profit here. Now you see something here that an aggressive trader use buy stop, just place the buy stop order here, stop loss, and take profit. An aggressive trader wait for price to close above the level, then on the same time frame, then wait for it to come down again and place the buy limit around at the level or around the level, the profit target here, and stop loss here. So what we observe is that both the aggressive trader and the conservative trader enter the market at the same price, they buy at the same price. One thing that happens is that one use buy stop while the other use buy limit. Aggressive trader entered when the noise is high, while a conservative trader enter when the noise is low. So they buy at the same price but at different time. This difference has created the differences. I mean, it has given the advantage. So it has given the conservative trader an advantage of efficiency, okay, and then accuracy over the aggressive trader, okay. Between an aggressive and conservative trader depend on what I see at a particular time in the market. Let's look out for another method. Another situation, another setup that has happened, so I can use for an example. Let's see. Okay, let me take the opposite of this trade here. This is a downtrend. You can see this move broke this support, and that's a major move on the chart. So we come here and pick our Fibonacci tools to gauge if the retracement is tradable. Now this is a Fibonacci tools to gauge the bullish retracement. The trend is down. We are in a bearish trend, so we have to expect a bullish retracement. We have bullish retracement in a bearish trend. These are the important Fibonacci levels: 61.8%, 50, and 30.2%. They constitute support in a downtrend. Okay, so when we have a downtrend, the constitute resistance is downtrend and a support in an uptrend. Okay, they constitute support in an uptrend and resistance levels in a downtrend. So these are resistance levels now because we are in a downtrend. They oppose counter trend. They tend to oppose counter trends. Okay, so now this is 8.2%, 50%, 61. So this market retrace, this trend has been retraced up to this important level. So this is a valid setup for us to sell. So we can remove this now and place retracement tools on this correction. The correction is upward, so we check it out, put it from swing low to swing high. Now our goal is to sell at this point, stop loss here and take profit here. Sell in a downtrend at this point, stop loss here and take profit here. Now an aggressive trader would have sold at this point immediately, he stop loss here and take profit here, and you can see how he lost out. He lost out because the entry was triggered and the stop loss at the same time triggered. So that's a loss on his part. That is a disadvantage of being an aggressive trader. But a conservative trader will not respect this trade until there is a close below the support, and there's no such thing as close. So the trade is ignored by a conservative trader and upheld by an aggressive trader who lost out eventually. So if we are looking at stuff like this, a conservative trader, an aggressive trader does not care about any confirmation, but a conservative trader will look for a close below a support before he sells, a close above resistance before he buys. So there's nothing more important to a conservative trader than confirmation. A conservative trader will not trade without confirmation. So a close below a support is the confirmation that the support is broken, and a close above resistance is confirmation that resistance is broken. So So we tend to trade the break of a support in a downtrend and the break of a resistance in an uptrend. So this strategy is very good for price action trader, and that's how it works. I hope you understand it. If there's any part of the video that's not clear to you, please, you can contact me. This is my email, and I'll definitely do my best to make it clearer, to make it as clear as possible. And then this is my blog. You can always visit my blog to read good stuff, to enjoy good stuff that can, enhance your trading performance. Lastly, I will appreciate you for your time, and I will also appreciate it if you can subscribe to my channel and leave comments and make my channel lively. Thank you very much. I wish you success in your Forex career.